Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions and form your own financial conclusions and make your own financial decisions. Today is Wednesday, November 24th, 2021, and this is Blockhead Traders Weekly. In this week's episode of Blockhead Traders, it's just myself this week. It's a holiday week here in the US, and it's a special holiday week because this week of Thanksgiving week actually marks the annual demarcation of when I actually began starting my current investment journey, my current trading journey, and I'm going to take a look back at the last 2 years of this journey. So it all began in 2019 is my current journey, and we'll take a look back at where it all started. How did I get where I am here today, and where do we go from here? But before we hop to that, I want to give a shout out to our Discord, link in the description below. You can check out our Discord, say hello. There's a couple of active traders in there. We'd love to hear from you. Tell us what you're trading. Tell us what you're trying to learn. Tell us what you want to know. And we'll create content specific to the things that you're requesting. Additionally, you'll find a link to thetagang.com/sprocket888. That is a link where I post each and every one of my trades, the good, the bad, and the ugly. You can see my complete track record. But let's hop to this week's content about taking a look back at the past 2 years of my current trading journey and see where did it start, how did I get where we are, and where are we going? So like I mentioned, the current journey that I'm on started back in 2019. It was actually around October of 2019. And that's really when I decided I just had kind of enough of the current wealth creation trajectory that I was on, and I said, "There's got to be more." And I started around Halloween time, a little bit before Halloween, just kind of googling around the internet and reading various articles about investment, trading, building wealth. It was a whole mess of content that I actually looked at. A lot of gimmicky stuff, a lot of good stuff. When you start getting into making money in the stock market, you'll find all kinds of interesting things on the internet and all kinds of interesting people that want to give you money. So the way I kind of approached it was I wasn't giving anybody any money for any of the lessons learned. I wanted to really look at a lot of the free resources available and just see what different data points were out there and kind of hone in on something that kind of interests me or that I could kind of get behind. And we'll kind of dive into that here in the coming slides. But it was around Thanksgiving time. Actually, it was just the week prior to Thanksgiving that I opened up my very first trade on my current trading journey, and it was a $2 put vertical in Kohl's. And that really marked the first trade, and we'll kind of talk into how it kind of snowballed from there. But the balance of 2019 was really a lot about researching and experimentation. I started with $2,500 in my trading account, and it actually was a trading account that I had for many, 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 many years, just kind of buying and holding different equities, things like that, never really trying to contribute a lot to it. I had experimented with trading and investing probably a decade or so earlier, and this was just leftover money that was in that account, and it was all about kind of taking this $2,500 and deciding what can I actually do with it. Can I actually make something of it? And that's really the only contribution that I had in 2019, was just kind of messing a little bit with that money in the attempts of the stuff that I was reading about and wanting to see it, to feel it, to touch it, to see how that actually worked. In 2020, I basically started getting enough confidence that, yeah, there might be something here. I want to do some more experimentation. I want to try to narrow into a system. And so I actually started weekly contributions into my brokerage account. It was a very small amount every week. I think it was like 25 or $50 a week that I would set aside from my expenses, and I would put it in that brokerage account to just give me a little bit more money to kind of play with and to experiment and to really try out the things that I was learning, the things I was reading, the things that I wanted to just kind of understand more holistically. And that went pretty well. And you can see, mid 2020, I mean, lots of interesting things happened in 2020. But I didn't really lose my interest in the market or trading or investing. And so I really started to hone in on what I would call a trading system or a trading methodology. It's largely what I talk about on this channel. Short premium selling is what I consider my bread and butter, but back then I didn't really know if that was going to work out. And so I really wanted to start to see if that could scale. But I didn't have any extra capital to sit around to kind of put that into the scaling capability. And so what I found out was I could leverage my existing IRA fund, carve out a small portion of that money in my IRA to see if scaling up in capital would still work. So I was having success through the first half of 2020 with my premium selling. I was honing in on a system, and about mid 2020, I decided to see if that would scale with capital. And in order to do that, I basically gave a small portion of my IRA account to that trading system and trading methodology. But by the end of 2020, I decided that this actually was very feasible to very highly probable that it was going to work out as a trading system that I could rinse and repeat on a monthly basis and really add extra income for myself. And so I decided at the very end that I was going to go all in 21. Now, all in doesn't mean I dumped all my money in there. In a design philosophy, in 2020, I was designing the system that I was going to use for trading, and I was pretty happy with the prototype results. And so all in 21 was really about executing that plan consistently over and over and over again. And because in 20, I was basically kind of changing the system each month, right? So I didn't really have a track record that basically said, hey, this is going to work in the long term. It worked for the previous month. I would tweak a little thing and it would work for the next month, and I would tweak a little thing. But I never actually had consistent month over month over month over month results of the exact same system. And so that's really what all in 21 was. This was me committing to the trading system and the trading style that I had been building and formulating all throughout 2020. But let's go ahead and take a hop back in time to 2019. And this is very important, and I want to speak to this here, not just to kind of make it sound like, ooh, look what I did, I can do this, but to relate to you, the viewer, that you might feel the same way that I felt in 2019, and don't let that feeling discourage you, because you can make something work if you have enough drive and desire and interest to learn something. It can work, and it will work out for you, but you need to have that drive. You need to have that thirst for knowledge as you approach that. And really what it was in 2019, and I don't know what actually led up to it, but it was more of a feeling of frustration that wealth creation was not something that seemed attainable, at least within the current approach that I was taking. And that current approach is really, I attribute it to the way that, I was raised, the way that the mentors around me, who they were, how they viewed savings, how they viewed growth, how they viewed planning for the future. Not to say that their ways are wrong. They certainly were valuable. They certainly taught me a lot of my work ethic, a lot of my ability to go out and seek knowledge. But with anything, there's always other portions and lessons that you can learn and other influences that you can have. And so the stock market was one of those things that, I didn't really have anybody that ever told me much about the stock market. I knew it was out there, and I knew you always kind of heard these stories about people that said, "Oh, if I'd had invested in Apple or if I'd invested in Microsoft, I had the opportunity to buy IBM." Um, and it was kind of joked around about or talked about as, ah, yeah, stock market. That's just this thing that very select few people can actually get lucky at, and that's never going to be you. Everybody has a stock market story, and everybody has this missed opportunity, and such. Woe is life. Um, and that's kind of the framing that I always had, in the things that influenced me in life. And the wealth creation process that I was really exposed to was always a go get a good education, go get a good job, go work hard at your job, and you take your savings and you put your savings in a bank account, and that is how you build wealth for the future, which is 100% possible, and is for real a thing that you can do, albeit your growth of that is going to be relatively slow. And that's what I was observing and experiencing back in 2019. And I said that there's just got to be a better way. And that's really where I started kind of Googling around the internet, reading different financial articles, investment articles, trading articles. There's so much snake oil, let's call it, out there about, oh, do this system and do this and it works out and you're going to make millions. So I kind of started honing in on the world of options. So I'd always heard about options. People always talked about options. I didn't really actually even know what the heck they were when I first started reading about them. And I quickly started picking up that there were two distinct camps in the world of options. There were option buyers and there were option sellers. And I really started looking into, well, when do you do one versus the other? And what's the benefit of this? And what's the benefit of that? And that's really where I started gravitating more towards the selling of the options. And I think what really grabbed me when it came to the option selling was a lot of the mathematical representation and the mathematical uh, foundation that a lot of the option pricing is based on, a lot of the behavior is based on, and the fact that there's a lot of probabilities in there. And all of that really made sense to me and my brain. So I'm a very technical individual. I have an engineering degree. I have a lot of background in science, math, and technology. And so just really kind of learning about how options are priced, the different mathematical models that represent the prices of those options, it really spoke to me and really kind of interested me. The other part that I really liked about the option selling is there was really no get rich quick aspect to the option selling. And what I mean by that is everywhere you looked at it, it was always, people equate it to picking up pennies in front of a steamroller. I hear that analogy a lot. The amount of money that you get from selling the options, you're not going to brag from a mountaintop, or you're not going to call up your friends and your family and be like, oh man, I just hit it big on this, whatever play it is. Because when you sell options, you're really not getting that much money with respect to what you could do, you know, buying options or taking these moonshots. Now, you might think, well, why the heck are you going to do that? And the answer is because the probability of success is actually on your favor. And so one of the things that really stood out to me as I was reviewing and researching all of these different trading techniques and investment styles, and this is kind of a no-brainer looking back, but there really, really is a strong correlation from risk to reward. And so the riskier the investment, the higher the chance of the higher the reward, not the higher chance of reward, the higher the reward. The lower the risk, the lower the reward. And in the way that I was looking at selling options, I was basically selling far out of the money options. And so these things have a very low probability of becoming in the money. And as an option seller, you want them to remain out of the money. So they had a very high probability of success. Because of this high probability, they didn't really carry as much risk as, something that has a lower probability of success. And so it's a combination of this high probability, low reward, but you're able to do it again and again and again. And so I kind of equated in sports to, you know, my trading, my investment is stepping up to the plate and hitting single after single after single after single, versus a lot of other approaches is stepping up the plate and trying to go for that grand slam each and every time. The chances of you hitting that grand slam are relatively small. Now, if you hit it, that's going to be awesome for you. Congratulations. That's great. Um, but if you want to be in this game for a long time, you really want to just keep hitting those singles, because if you hit enough singles, you'll get enough runners home that, most of the time you're going to perform better and you're going to win the game versus the guy that's trying to hit a grand slam each and every time that he steps up to bat. And, I distinctly remember my very first trade as this short put on Coles. And so I sold this far out of the money put vertical for $2. Well, it was a $2 vertical. I didn't sell it for $2. But I picked up $80, I think was my profit from that trade. And you might think, well, good job, you got $80. Like, that's nothing. But to me, that was the very first exposure that I had of actually seeing this strategy, this methodology work out. And it was really cool to see that, hey, I sold this price, I sold this put, and you watch how the stock reacts, you watch how the pricing of those options change over time as you approach the expiration. And it was just a really empowering moment for me that just said, hey, this is probably the approach that I want to take, and this is the approach that I want to learn more about. So for the rest of 2019, I probably made a total of maybe 5 to 10 trades in the time between Thanksgiving of 2019 and Christmas of 2019, the end of the year. It was a very small number of trades. All of the trades were very, very small in nature. Like I said, my brokerage account had $2,500 in it. And most of the trades that I was putting up, I was risking no more than $100 or $200 in each trade that I was embarking on. And for me, it wasn't about trying to make money at this time. It was really about understanding the mechanics and understanding how the trades develop and kind of proceed in time. And in the process, I had so much to learn. And it was really about scouring the internet to find good content sources and build upon that strategy that I wanted to take. So that brings me into 2020, where I had a little taste of success there from 2019, but it was more, okay, how do I take this and build upon it? How do I actually start crafting a system out of this? I'm an engineer at heart. I like to really try to understand. I'm very methodical in my approaches, very scientific in the method that I take, where, you don't try to change 50,000 things all at once, right? You're very methodical about, I'm going to change X and we're going to see what that one change is going to do. And okay, now I got that. Now let's change Y. It's slow, but you have a good, strong correlation to the change points that you have, because you're not making tons of change points. So exactly, what you have changed from the baseline. And so the first thing I wanted to do in 2020 was start contributing weekly to my brokerage account. So I had proven that, hey, I'm probably onto something. I don't know, how far this can take me. I don't know how this will scale up, but I do know I need to put a little bit more capital in my trading account. And so I started off by just adding $25 a week from my expenses to put it in my brokerage account, just to kind of slowly over time build up a little bit of a chunk of extra money in my brokerage account, so I could keep expanding the methodologies and things that I was learning. The other thing that I did, again, back to my scientific background, my engineering instincts, let's call them, and it was track everything. And you can go back to previous episodes. I've actually gone over my trading journal that I use, and I can tell you that this was probably one of the most important things that I did as I was learning about things. And what I mean by this is everything that was going through my head, I tracked it. I tracked the time that I entered the trade. What was I thinking? What was the delta of the trade? What was, the current news around something? And just anything that I could think of, I tried to put in text in an Excel sheet, because looking back, I knew that I was going to want to kind of go back in an aggregate over time and really reflect, okay, well, what were some of the things going on here? What worked? What didn't work? What was I thinking? And there's no way that you're ever going to remember that. You have a tendency to remember things the way you want to remember them, versus the way they actually were. The other thing that I did at the beginning of 20 was I decided I'm going to work on monthly cycles. So this will give me essentially 12 data points throughout the year, 12 months in a year. And I was going to change my trading methodology and my trading approach, no, not more frequently than monthly. So every month I would commit to a particular strategy for that monthly cycle, and I wouldn't make any changes until the next monthly cycle. And even then, I'm not going to make drastic changes. I'm going to make small tweaks, small changes. And those changes are going to be educated changes. So, right. So I didn't just randomly say, I wonder what would happen if I did this, right? I'm looking back at my tracking method and my journaling method to say, okay, here's an observation that I've had. Let's try to correct that observation that was maybe a negative. If it was a positive, I would continue doing that particular thing. And that's really what guided a lot of my changes that I made from month to month. I started to kind of hone in on the system that I was going to use by around midsummer. And that's where I decided, I really want to try scaling this up with capital. But I didn't really have a lot of capital, on the sidelines that I would have the opportunity to leverage. So what I did was I actually used my IRA account. And so an IRA account is just an individual retirement account. And if you have it at a broker, you can engage in almost every type of trading style. There's a few things you can't do. One thing you can't do is you can't sell naked options in a retirement account. Now, that was okay because at the time I wasn't really comfortable with selling naked options. And so that was an okay restriction for me. And what that allowed me to do, my system was really based on the number of occurrences that I can generate in trading. So my approach is to sell a lot of options, and it's not to sell, one or two. It's to generate a high number of these occurrences, because the law of probability, the law of large numbers, basically says that over time, your probability that you're selling is going to trend to that number if given enough occurrences to make that trend. And what that basically means is, okay, you only do one or two, right? You're not guaranteed to get that probability win ratio, because, it's still a probability. So if 70% of the time things are going to work out in your favor, there's still 30% of the times that they're not. And so if you only have, two or three occurrences, you could potentially, unluckily land those two or three attempts in that 30% failure range. And you might think, great, this is a sham. This is a bust. And so the only way to work around that is to make sure that you have enough number of occurrences to make those probabilities true. And scaling up with the IRA account allowed me to move into that realm and actually test that theory and prove it out, and that it does in fact trend and it does hold true, and those numbers are achievable and they are attainable given you provide them enough opportunities of occurrence. One of the things that I learned from this is, of course, my IRA account had a substantially large amount of capital compared to my brokerage account. And the first thing I did was thought, oh, I have a lot more capital, I should make much larger trades. And the thing that I learned is position sizing is almost as important as tracking everything. And so you can go back to some of the episodes in our back catalog that talk about position sizing, but it was here that I learned, one loss with an oversized position can really set you back in your goal to positive wealth creation. And so if you don't keep your position sizing correct and you screw up once and you trip and fall with a position size that's too large, it can wipe away a lot of those singles that you tried to put up on the board. You cannot write it off. Like, you need to make sure your position sizes are sized appropriately. Go back into our back catalog to look for position sizing. I'll put a link in the position sizing episode up in the corner of this video so you can go back and watch it, because it is one of the things that I think are super important. So yeah, as 2020 went on, I started refining different approaches. As you might recall, we went through a global pandemic in 2020, or at least that's when it started. A lot of people would argue we're still in a global pandemic today. This created a lot of interesting market environments that I was trying to trade in. One of the largest drawdowns and the largest drops in the S&P, the Dow, the NASDAQ actually happened, in March of 2020, which is exactly when I was trying to learn how to trade some of this. And so call it a blessing, call it a curse. I don't know. I feel very fortunate to have experienced that within the very early parts of my journey, because it helped me to not take a particular market style for granted, right? It helped present very different market environments throughout 2020 of that big crash and a long climb out. Now, really, when we started getting to the end of 2020, I was convinced that what I had was definitely something that can work. What I didn't have, because 2020 was all about designing, prototyping, is I didn't have consistent month over month over month over month of results to really see how a particular approach can help create the wealth, right? I had lots of months that I was tweaking and turning and changing things. So some months were really good, some months were really bad, where I was saying, oh yeah, this doesn't work, or oh, this works, let's keep this. And then I change another variable and maybe that works, so I keep that, and I change another variable and something didn't work out. So I didn't have this very consistent thing where for 12 months straight, I did the same thing again and again and again and again. And that's where the decision really at the end of 2020 came in to say, okay, I think I've tweaked this thing enough. I think I have a design here that works. I think I have a core that I can build upon. And I really need to do what I called go all in 21. Now, going all in doesn't mean, oh my gosh, I'm going to cash out of all the stuff. I'm going to take all the money that I have and I'm going to dump it into this approach, right? That's not what I mean by all in. What I mean by all in is committing to the trading methodology that I had been creating and tweaking throughout 2020 to see, okay, how does it go? How can I create a track record from this if I stick to this plan, no matter what, over and over and over again, to see, hey, is this even something that's even feasible? In the back of my head, I'm like, maybe this is something I can use to live off of, right? Now, it's not an immediate goal of mine to do that, but it's something that, hey, this approach would work really well in retirement, where you don't have that kind of monthly income from a day job, kind of backfilling expenses that you have, right? Can I take a large chunk of capital and invest it iteratively month over month over month to have a decent return? And so that's really what this all in, hey, totally commit to this trading style and see what comes up out of it. Enter 2021, the current year. This was my all-in year. This was my commitment to the trading system and trading style that I had developed for all of 2020. And I basically said, look, very simple. I had two main goals. It was to basically, well, one of the rules was to follow the final output of my iterative experimentation within 2020 and say, here's my system, follow it every month in 2021. And my goal after doing this for 12 months was basically twofold. First goal was I intended to return 6% a month on my capital when averaged the entire year over the 12-month period. So, some months might be above 6%, some months might be a little bit below, but if I looked back at the entire 2021, can I return 6% a month on my capital in my brokerage account? That was goal number one. Goal number two was to never have a monthly loss. Okay. So to get the 6% average right, I might be above 6%, I might be below 6%, but my secondary goal was to never have a losing month. Now, again, this was an all in, but this is kind of an experimentation still a little bit, right? I didn't know if this was going to work out. I wasn't sure. And so one of the other things that I decided to do within 21 was to cut weekly contributions to my brokerage account. I needed to see if this system can stand on its own without feeding the account more money from the outside into it, right? I needed to show that if I started this account with balance X in January, that I can grow that account to balance Y in December at the end of the year. And I didn't want it to be the waters to be muddied because, I'm pouring in extra money, which kind of covers up some of the negative trades that I had or things like that. So in addition, this might not actually work out. And so I kind of wanted to not throw all my eggs in one basket. So I took that monthly contribution that I had been doing throughout 2020 and I put it into a savings account. One of the things that I learned in 2020, which you kind of know about, but actually seeing something in practice is a whole lot different. And that was the implications to the tax bill from trading things. So a lot of times, if you have just earned income, your employer is going to withhold federal taxes, state taxes, local taxes, all those fun things, right? They know how much you're paying. They know how much they're paying you. They know what tax bracket you're in. You kind of tell them your exemptions, yada, yada, yada. And when you go to file your taxes, it's relatively straightforward. You don't have to account for a lot of other income if you don't have other income aside from that earned income flow. When you're investing, when you're trading, depending on how much you're doing and how much income is actually coming from that activity, you could potentially have a relatively high tax bill at the end of the year. And so because I was going all in 21, I basically said, okay, look, I am not going to add money into this brokerage account, but I am going to also pay any tax obligations I have from inside this kind of walled off encapsulated account. So I wasn't going to use any of my weekly income from my day job to pay for the taxes from this experiment, right? This experiment needs to stand on its own. It needs to pay for its own taxes. It needs to generate its own income. It needs to generate its own growth. It's really going to be isolated and firewalled off from my other finances. So I did also make monthly withdrawals from my brokerage account to squirrel away in a savings account such that when the tax bill comes, I had already collected all of the money or already squirreled away a section of the money to pay for the taxes that would be due. My system was all built on premium selling of options. So that's what I call the core. And so I stuck to the core. But I noticed that there was always this little bit that there's other methods to do, like other ways that I could put into that portfolio allocation. Maybe that is holding dividend paying stocks. Maybe that is buying a call. And I didn't want to taint my results. And so I never really strayed from the core, but I might try one or two trades on the side just to see how it panned out. And so towards the end of 21, I had built up quite a good track record of performance every single month. And so I felt that everything was kind of proving itself out. Because I was tracking everything, I could easily isolate these experiments that I was actually running on the side of different trading styles, different things to really try to diversify my strategies and my approaches. So it wasn't 100% premium selling, but that would be the core and the foundation. There's still a month left, the month of December. My strategy, as you've kind of heard in different videos before, is really based around selling the options and then closing them out at about 21 days to expiration. So, the last month's options here basically expire third week in December. 21 days out from that is roughly right about now. And so I'm starting to look at opening the January positions in 2022. So my year of 2021 trading is really coming to a close. So you might wonder, well, did you reach your goals? How did you do? And I was very pleasantly surprised on the achievement that I did have. I did meet half of my goals. So, my first goal of returning 6 months or 6% a month on my capital in my account, I did meet this. Now it's a little interesting how you do the different calculations, but how I decided to do it in my tracking method in my sheet basically show that I averaged a 7.5% return on my capital every month. So every month, essentially over 12 months, I grew my account by 7.5%. I definitely am proud that I was able to attain that goal. I definitely think there were some things in my trading strategy that I don't really know that is scalable as the account grows. I think there was a couple of lucky trades that went my way where I was able to keep that afloat. I do feel that number is a little too aggressive moving forward based on a lot of what I saw and what I experienced. I think a much more appropriate number for me to shoot for moving forward would be more in the 3 to 4% return on my capital in a month. In 22, I am going to be adjusting that target down a little bit. You might say, well, why the heck are you adjusting it down if you actually met it within 21? So I'm really kind of conservative when it comes to that. I would much rather have the money in the account to keep playing the game. You might have heard in past episodes, I always talk about investing and trading as an infinite game. There is no winning. There is only losing. And losing basically means you don't have enough money to keep playing the game. So I want to kind of dial down my risk taking a bit. And one of the ways to do that is to kind of lower some of the profit targets that I'm really shooting for. So like I said, I believe a 3 to 4% return a month is a little bit more appropriate. There were some circumstances, I think, that allowed me to get that 7.5% a month. As far as my other goal, I sadly did not meet this goal. I actually thought I was doing quite well against this goal. So there are 12 months in a year. And my goal was to never, ever, ever have a month where I have lost money. And unfortunately, in late summer, early fall, I did have a month where I booked a loss for that month. So if you look back, I had 12 months. One of them was a sizable loss. One of them I'm going to call a scratch, even though it was a positive month. And then that basically leaves me with 10 decently profitable months. So the great news about this, my conclusions are the system works. The approach that I have of selling out of the money premium works. What am I doing differently in 22? Well, not a whole lot. As I said, the system worked. I'm very happy with the results that I had within my all-in 21. I am going to bring back the weekly contributions to my brokerage account now. I feel very confident in the approach that I am taking. I feel very confident in the conservative nature of my system. And so I will be putting more contributions back into the brokerage account to continue to grow it. One of the other changes that I want to do is I want to start to allocate the capital a little bit differently in my brokerage account. Of course, my bread and butter, my core of the portfolio is going to remain this premium selling option strategy. However, I want to make more room for learning other methods, learning other things. One of those aspects is rather than keeping the extra cash in my account for buying power expansion and things like that of my premium selling, I want to take that capital and invest it in stable dividend paying companies. So, you know, yes, this will kind of open me up for a little bit more downside risk because the extra money is not in cash. It's basically invested in a company, in an index. And so that leaves me a little bit more vulnerable, but I feel that it is a relatively good use and efficient use of capital. And because I'm starting to learn to control the risk on my premium selling by leveraging a lot of delta neutral plays and things like that, I feel comfortable in my overall portfolio risk in taking some of this cash and instead turning that cash into dividend paying companies and dividend paying ETFs to kind of get a little bit extra premium, a little bit extra income to make that money work for you a little bit more. That's one of the changes that I'm making that I would classify as this capital allocation diversification. The other thing is, I really would like to try to hit a grand slam here or there. And like I said, I think there's a place for grand slams. I don't feel personally that the grand slam approach should be your bread and butter, but it certainly has a place in your portfolio. And so I want to carve out a section of my capital allocation where I'm going to go look at these moonshots or these grand slam opportunities. I'm going to step up to the plate and I'm going to try to swing for them with this small portion of my account, back to position sizing. But it's going to be something that most of the time I'm not expecting for it to pay off. And as long as I can control the losses in that small allocation, should I ever get a hit on a grand slam, that will help the overall appreciation of my portfolio. And lastly, I really plan to keep sharing what I'm doing with you guys, the viewers, keep up my communication in the Discord channel, and keep sharing my journey of learning to trade with other people. That's really where this channel came from. This channel is built on putting forth that honest knowledge and imparting that wisdom to you and opening the right avenues and the communication for you to ask us questions. I wanted to create this channel to help other people see real world. This is somebody that went on this journey. This is what they learned as they learned it. This is not, looking back after years of doing this, right? We film these episodes week after week after week, and we film the stuff that we're learning, the stuff that we're encountering every single week. We're not, casting back and trying to record an approach years after something happened. So Viper and I are legitimately learning as we go and sharing that journey with you. Let us help you, okay? One of the strongest problems that I ran into is I had no mentor, right? You go back to my exposure to the market, the people that I know, the people that I'm around, I didn't have anybody to ask questions to. And I definitely wanted to try to fix that for others. And so that's why I created the Discord. That's why I'm doing these videos. You can put your comments and your questions in the content below in the comments. You can join our Discord. You can talk to me. You can talk to Viper. And we really just wanted to create a platform and a framework and an environment for others to learn. So that brings us to the end of this week's episode. It's just a look back at the past 2 years of my trading journey, my trading experience. I hope you enjoyed a little bit of this trip down memory lane. I want to make you realize that this is perfectly attainable for every average person out there. I didn't do anything extra special. I don't spend hours and hours and hours a day watching the markets trend up and down. Do I glance at them? Yeah, absolutely, because I'm interested in them. But my trading system that I have which this episode is not intended to go through that trading system. This entire channel is about that trading system. But this short premium selling is not something that you need to be glued to your screen. This is not something that takes a lot of time and attention. I have a full-time day job. I maybe get to look at the market a little bit before close, or a little bit before open, and maybe a little bit after close. I set up my trades in all the after hours. My methodology, you can look and scan and set this stuff up completely outside of market hours. You really only need the market hours to execute. You can line up all these trades outside of market hours. Your brokerage account will execute these things automatically for you once you set them up. So the amount of time and attention that you need during the actual trading hours is almost non-existent with my strategy. My strategy is built on actually having a day job, so this is not super time intensive for me to try to get worried about not being in front of my screen. As time goes on, everything is a slow, high probability trade that I'm putting on. I'm very happy with how the past 2 years have turned out. I'm very encouraged that I was able to find something that interests me. I was able to refine that into something that actually works. I, methodically proved it out as something that is attainable, it is achievable, and I'm moving forward with it. I would say a couple of the lessons learned that I think are just super important and super critical to understand. Position sizing. You have to control your position sizing. And what I mean by that and how that's related is I learned in all of this testing, all of this approach, that, one of the conceptions that I had that is, oh, these people that trade, they must win all the time. They must know all this stuff. They can catch the trends before they take off. It's just not true. The people that are winning in the market, sure, they catch a couple of the big breaks, but they lose a lot. The difference is they can control their loss. And if there's one thing that you need to be able to build into your system and to build into your thinking and your mental game, is control your loss. Control your loss. So the difference between a good trader and a great trader is how they deal with their losses. Remember, you're never going to win them all. Never. I don't care what trader you are. You're going to lose. And the difference is, can you keep your losses small so that you might win 70% of the time and lose 30% of the time? But if those 30% losses are ginormous, they can wipe away those 70% wins. And so the difference here is keeping that loss rate small so that the wins will overpower your losses. Looking forward to the balance of December. Viper and I are going to look back more specifically on the trades that we made within 21. We're going to do some recaps, some lessons learned, big points. Both Viper and I did experiment here and there throughout the year. What were our best lessons that we were going to continue to do, and what are the things that we learned that we absolutely want to stay away from? So stay tuned for that. We've got a couple of good weeks left in 21 here yet before we hit the Christmas and New Year's slowdown. Next week is a full trading week. I hope you guys get out there, get in the market, have fun, take a look at the opportunities, and remember to think outside the block.